Welcome to Navigating Your Retirement. I'm your co-host, Tony Shore, and I'm here with our host. The man with the plan is Travis Chance. Travis, how are you doing today?
Tony, I'm good, my friend. I'm good. And folks, listeners, I want you to join me in wishing Tony a happy 60th birthday this morning. So
It is
uh
today, the
I
big
would say I
60.
would I would offer to sing you happy birthday, Tony, but we're trying to add listeners and subscribers. We're not trying to lose subscribers. So I'm gonna go just an emphatic and sincere happy birthday. But
Oh, thanks, Travis.
yeah,
I appreciate it.
I'm not gonna sing the Marilyn Monroe happy birthday to you.
Well, I'm glad you're not going to do that. We're all thankful
I think
for
we're all
that.
happy that I chose
One
that.
more thing to be thankful about this morning. Yeah, I don't feel 60. Hopefully I don't look 60. A lot of people, when I tell them, they're like, there's no way you're 60. And I always say, Travis, yeah, it's my immaturity. It throws people off.
There you go. There you go. Don't let the old man in, like I said this morning with
Yep. Don't let the old man in. That's the secret, right?
and folks, since Tony and I don't know, you and I always talk movies. I don't know if you guys have seen this, but the quote comes from the song in the movie The Mule with Clint Eastwood. And if you haven't
Ooh,
seen it, it would be a good Netflix or I forget, maybe it's HBO. I think it's HBO Max or whatever it is it's streaming
sure.
on now. So who knows? Netflix will probably own it by the end of the week, right? Warner Brothers Discovery,
Paramount.
Paramount. So
Yep.
who
Yep.
knows? But yeah, if you're looking for a popcorn night and staying in, kicking your feet up and catching a good flick, The Mule's definitely something to
Awesome.
see. And it's from the soundtrack, the Toby
Yeah.
Keith song "Don't Let the Old Man In." So
I love it. I love it. I haven't seen it, so I can't wait to watch that one. Well, hey, Travis, let's jump right into our topic today. There's a lot going on out there. Obviously, we went to war with Iran. Uh,
well,
we got rid of their leader, the dear leader over there. He was the oppressor. He was a horrible, horrible person oppressing his people. So now he's gone.
he
That's
is.
good. And they kind of cleared the whatever that strait is with the ships, that channel.
Great of Hormuz.
Yeah, they're clearing that out. So hopefully we've accomplished the mission there or come close.
Well, I think war might be a bit dramatic.
Sure. Yeah. Well,
It's fine.
that's what you hear on TV. That's the
Sure.
thing. Yeah.
And I think that's really what I want to talk about this morning. And this is not gonna be one of our longer shows because I want to give the facts, kind of like Dragnet, remember?
Just the
Just
facts,
the
man.
facts, you know.
Yeah.
So we've seen obviously a lot of tension, a lot of headlines about what's going on in Iran. And let's face it,
Yeah.
I mean, there's not boots on the ground yet, but we're seeing, obviously, like you said, some targets and some other things happening. But is it a boots on the ground moment yet? I don't know. It could happen today, but as of
Hope
yet,
not.
hasn't happened yet.
Yeah.
But one of the things that tends to happen is when global markets, you see conflicts pop up, you
Right.
tend to have sometimes markets react good or bad, right? And a lot of what's going on right now is because it can feel unsettling, especially if you're retired and depending on your investments and your income. And that's really where that's where our part of the river is, right? Is how to help retirement or retirees feel more confident about being able to weather these kinds of storms. Because let's face it, geopolitical risk, this is not new. I mean, just this conflict is new, but the overall impact of geopolitical risk is not new. I mean, I pulled the last five, and heck, the last three or the first three on the list are from the last 5 years. So we've seen this play out before. Obviously, this has kind of been 40 years in the making. I know there's a lot of tensions, a lot of emotions that go along with it, but volatility in any kind of situation like this is typically very normal, because you have things that are going to be speculated on, and what's going to happen to the price of this and what's going to happen to the price of that. So that's what we're going to talk about this morning is
Yeah.
how in a a day where we typically, have a 60-second news cycle, not even a 24-hour news cycle, right? It's the next thing comes up on your feed. How do we look through this and not overreact? Because I think that's where we get into issues, because you have a course, and if you do it right, you're planning for any type of event, not just, that markets are going to be calm and cool and collected. Because, short-term reactions, let's just talk about why. Short-term reactions are driven by what, Tony? Uncertainty.
Yeah.
Yeah,
Right.
it's like,
Fear.
what's going to happen? How's
Yeah.
this going to work?
Fear. They're driven by
Yeah.
fear.
Yeah, I mean, don't get me wrong. I don't discount that anything that's happened is not, significant. It is,
Sure.
but at the same time, I don't think that the headlines that you're seeing come out are truly, all, how can I put this? All knowing, all seeing. We
Sure.
don't know, right? I mean, I hate to say
Well, the
this.
media is gonna
Yeah,
always.
no,
It's always gonna make it out to be worse than it is.
exactly. If it
Typically,
bleeds, it leads, and that
yeah.
that's
The
a
sky is
very,
falling.
yep, that's a very hope. I mean, I'm not trying to insult anybody, but that's a uh, very true saying when it comes to the news and
Yeah.
to the to the media you see on TV.
Yeah.
Used to, hate to say it, I wish we could go back to Walter Cronkite. We got 30 minutes, you got the
Yep.
facts, that was it. But that's not the case anymore. So
No.
don't let the news media and the news outlets really cause you to overreact. Now, one of the things that really causes people to worry when you have geopolitical risks like this, especially in the Middle East, is because of oil prices. And we, don't get me wrong, I enjoy paying low gas. You enjoy paying low gas, Tony.
Oh yeah.
Could this have a short term or mid or medium term impact on gas prices? Absolutely. I mean, because of I think just like 20% of the world's oil goes through the Strait of Hormuz, like you were talking about. Could that cause a bottleneck? Could that cause issues? And could that cause prices to go up? Absolutely. Now,
Yeah.
I'm not saying it can't, but we've seen this play out before. And that's, when we get into it in just a second, that's what we're going to talk about. Some of the other things I think that we've seen, and we kind of felt this was building. I feel like that's not all the reason, but things like precious metals. I think over the last couple of years, you've seen the geopolitical risks start to ratchet up, and it wasn't just under Trump. Let's be fair. I mean, you had the Israeli Hamas issue back in 2023. You had Russia Ukraine start in 2022. This is not the first time we've seen this kind of turmoil, and I think that's also led to maybe some of the precious metals increase over the last a few years specifically, because there has been that elevated risk factor. And the one thing I do want to keep everybody keep in mind is, and Tony, you and I know we've seen this movie play out several times. A lot of times geopolitical risk and drops are short-lived. They typically recover in a few months. Now, some take weeks, some take months. But if you're prepared, and this is why I tell all of our clients, and if you haven't done this and you're not a client, you need to think about it. Tony, I recommend every single client test their portfolio against the dot-com crash in 2008 to begin every sequence. Why? Because we had a 50% drop in the S&P, or over that, in 2000 through 02, and then
Yep.
2008 was another 54% on the S&P. So
Terrible.
if you can weather those types of storms, those are major, like Cat 5 hurricane storms. Not saying this is not just as impactful, but is it going to be that magnitude? Probably not. So if you plan for those types of things, then usually when the markets do drop, your first instinct is probably not going to be an emotional one, because you already know, hey, I'm already planned for this. We're already diversified for this. We already have our income stream prepared for this. So let's talk about, some of the things, especially in recent years. The most recent, obviously, everybody still kind of has Russia, Ukraine on the brain, because we're still trying to stop that war from happening. But, initially, 2022, you did see markets sell off. I mean, they
Yeah.
were down 10, 12, 15%. Then
We
they
had
had
a
a
whole down year.
Yep. Then they
2022
had a
was one of the
recovery. Then they
Yep.
had a recovery going into the summer. We had a little bit more chop, and 2022 was not the greatest year because we also had interest rates begin to climb during the same time. So, not saying that's going to happen again because I don't think it will.
But then 23, 24, 25,
Yeah, but that led us
huge
into
record.
really good years in the subsequent years following that. So, folks, this is something that we are obviously watching very closely. But commodities, oil. I think oil went actually to $100 a barrel during that time.
Yeah.
So you're seeing that initial spike now, like we talked about. Strait of
Yep.
Hormuz always an issue.
It's already
But
at the pumps. I mean, the
but
gas is
think about
already
where we were a
higher.
year later. A year later, we were where, Tony? Were we higher or lower?
Higher.
Yes. So, most of the markets had broadly recovered. There was
Yeah.
some volatility that still was there, but most of the markets had already priced that in and were moving forward.
Yes.
So it's always the first gut reaction to kind of take everything, internalize it, and you turn into a big knot, and you're like, oh my goodness, what am I going to do? What am I going to do? Well, a lot of times, if we plan for those types of things ahead of time, you don't have to do anything, and that's what I'm proud to say. All of our clients, they didn't have to do anything, right? I mean, I think I honestly and truthfully, I think I got like 3 nervous phone calls in 22, if that tells you anything. So, I mean, we have between 250 and 300 households, and to get 3 calls, does that tell you where we are planning for those types of disruptions or we're not planning for those types of disruptions? We are, right? And that's what you need to do. If you're out there listening and you don't know where you're going to turn, and you don't have anyone to kind of assist you through that, thank you for being here. That's why you're here. Number 2, we had the Israeli and Hamas conflict. That was in 2023. Obviously, same thing. You saw oil prices shoot up because why? Because it was the Middle East turmoil, and it translates to higher oil prices because it's the what if, right? At that time, it was what if Iran gets involved. Then we had the 2025 Israeli strikes on Iran, and Middle East spiked oil prices 7 to 10% that day. Now, VIX spiked. Dow had some rough days. S&P had some rough days, but a year later, it's honestly, you really can't pick it out on a slide of where that occurred, because it was a dip and then markets recovered pretty quickly. Gulf War, same thing. Oil prices doubled in a month, or just over a month. I mean, it was ridiculous. U.S. markets fell sharply. Geopolitical risk spiked. But then you had a year later, we were actually below where we were pre invasion, and U.S. equities recovered, and we were off to all-time highs. That was the start of the 90s. And of course, everybody, remembers the 90s. 90s were really good in the markets. And then last, just to pick the top 5, the 79 oil crisis, and Iran, oddly enough, Iran revolution, Iran-Iraq war onset, crude prices spiked, and we were a little wounded on that one because we were already coming out of Carter's hyperinflation. So that was a bit difficult, but that also led to what? In the early 80s, we had stagflation, but by the mid 80s, we were off and running, and the 80s and 90s ended up pretty well. So, folks, we're going to see these types of things go up, go down. Most sensitive initially. You're probably going to see some oil fluctuation. You're going to see things like treasuries and gold, which is why we hold them, right? In markets, Tony, where things just go straight up. A lot of times clients may say, well, why are we holding bonds? Bonds suck. Well, I mean, let's just call it what it is. They're like, bonds suck. They only earn like X. Well, now you're going to thank me and thank all your advisors out there for having them. It's
Yeah.
because in times of turmoil, those are typically purchased, and
Yeah.
that's a bid, and that's going to
Yeah.
cause
They
potential
had a
price
number
to
of
increase.
bad years between COVID and
Oh
2022.
yeah, well, I
They
mean,
were way down. I mean, 2022 is a horrible. The 3 years were horrible for bonds. But you know what? Look at bonds now. They're up and running, and
well,
it's a yeah,
Tony, think about what we saw though. If you go back, and we just talked about like the '80s. If you go back to the early '80s and you looked at a bond yield chart, we were getting yields in the 12-15% range.
yeah,
And as yield falls, price appreciates. So
right.
we initially started in the '80s and it ended in COVID. We had a 40-year bull market in bonds,
Yep.
and it takes a bear to get us back in check. And we had a bear market from 20, well, we're still actually in a bear market, to be perfectly honest, because when markets started to recover from bonds in 2020, we're still kind of flat to negative in the aggregate bond market if you look at the price appreciation. Now if you've
Right.
gotten the yield, you're a little bit positive, but it had to course correct, and that's follow with pain. We get it, but a lot of times it's like, why do I hold these types of assets? It's diversification. It's the seesaw, right? You want things to balance you out. You don't want to be overweight one thing, because then you might hit the bottom. You don't want to be too far this way, because same thing. So you use these things as diversifying methods to really kind of even you out. So
Yeah.
but getting back to what I was saying, the things that recover pretty quickly usually are equities, because traders know. I mean, if something starts trading at a real discount, I mean, let's face it, it's like, oh my goodness, should Apple be trading at that PE ratio? Should Broadcom be trading at 20 times earnings? And that's whenever you start to say, okay, when you're really feeling bad because you see all the proverbial doves flying, that's usually when the market's going to turn. So that's why you don't make emotional decisions, because you could literally sell at the top or sell, and then all of a sudden the market comes back, and you're like, oh my goodness,
Yeah.
you overreact, and you have to get it right twice.
Yeah.
You got
People
to get
actually
the sell
usually end up
and the buy.
selling they usually end up selling low and buying high
Right.
because they get emotional when they see, Monday morning, the first morning the stock market opened after the Iran conflict started. You saw the market dip just a little bit, but then by the end of the day, it was even positive.
Mhm.
So people panic and they're like, move everything to cash, and then it increases. Or if they see the market drop like it did last year in April with the announcement of tariffs, the market went down like 19%, but it jumped right back up and hit record highs. Well, all those people in April who got out of April of 25 and didn't get back in missed that huge upswing. I mean, it's just, yeah, I mean,
Well,
they made a huge mistake.
I think the way we overcome that is as advisors, and hopefully, if you're not a client, you're listening to our show, hopefully your advisor did this very thing for you. Periodically, you need to rebalance.
Yeah.
You can't just ride the same. I use this as my description and my analogy, or metaphor, if you will. So if you're in a horse race and you're riding, I don't care if you're riding Seabiscuit, War Admiral, or Secretariat, if
Right.
you don't let them off the track periodically to rest, they're going to run until they get tired, and then the rest of the field, I don't care how much of a lead they had, they're going to start catching up.
Yep.
So that's the reason why you can't bet on one horse over and over and over, which a lot of people have been doing.
Yeah.
And you have to introduce things like maybe international, or small and mid cap stocks, or you can't just ride the same thing over and over and over and expect that that's what's going to be the outcome. It doesn't tend to work that way. Now, last 5 years, if you really haven't been focused on large cap, you're probably not in the position you probably would be. or should be. And now we're starting to see those other horses start to catch up. So that's the reason, refill your cash buckets, make sure you're not leaving out your bond allocation in times of turmoil, and begin to look for ways to diversify your portfolio. And that's what we're recommending to all of our clients, Tony. And I think that's the only thing you can do, and actually help yourself sleep well at night in the process. Because at the end of the day, are we worried about some things? Sure. And I'll just give you a few that I've heard recently. Clients are like, what happens if oil prices go up? Is that going to bring back inflation, that type of thing? And in the short term, it could. It certainly could. I'm not trying to gloss over it or sugarcoat it, or
Sure.
gaslight somebody and say, oh no, that's just not going to happen. That's just you. Don't let your lying eyes fool you. No, it absolutely could. But once again, what do? You have to have a plan for those types of environments beforehand. It's like building a house. You can have a set of blueprints, and then when you're getting into the build, you can move it. You can move a wall interior. You can do the things, but your plan is what keeps you grounded. It's what has already provided the foundation, so that when you do start to use, build those things and put the things in the house, you can kind of mix and match to what makes you comfortable. And then the last thing I want to talk about this morning, Tony, is, folks, this is more of an informative show, hopefully, but it's also on emotions as well. Don't let anybody convince you, and your friends and relatives, I hate to say this, your Facebook feed. Tony, if all you did was get your news from those entities, you are probably about to pull your hair out right now.
Right.
Because it is, I'm seeing all kinds. The Facebook litigators, right? Now,
Oh,
all the
man.
people who are like, oh, you don't know, this is actually because of Turning Point USA or blah, blah, blah. It's like, really? Iran? Israel? That's because, anyway, yeah, I'm getting a bit silly, but you understand my point. Conspiracy theorists, all these things, it leads into our emotions, our psyche, and it makes us do things like panic sell, or, oh, I want to go to cash because Jane down the street had a great Facebook post and cited some blah, 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 blah. And it's not going to end well.
Yeah.
Markets tend to recover before you ever start feeling better about the news, and the news starts getting better itself. If you wait for certainty in the markets, you're never going to get in, because it's always going to be up and down. But the best thing to do is to plan so that it protects you from all these things, and not just the market turmoil, but also the market headlines. So, folks, a couple things that I'd like to close with is this. If you are out there thinking about your income sources, thinking about, are you diversified? Are you allocated correctly? It needs to be something you answer pretty quickly, because things can change on a dime, as we've seen. And geopolitical risks are going to come and go. Markets are going to adjust, but having a good plan isn't about avoiding volatility. It's about preparing for it before it comes, so that your income keeps flowing, your bills get paid, and you can focus on your life and living your life rather than watching a news ticker. And that's how I think you need to move going forward. So if that's you out there listening, please know, if you're a client of ours, all we are is a phone call away if you need to talk through some issues. But also, if you don't have an advisor, this is where our services pay dividends, because we can help talk you through things before a mistake is made. So, Tony, if they're out there listening, they need to give us a call, 877-269-0839. That's 877-269-0839.
All right. Thanks, Travis. Yeah, keep those emotions in check. And I think the way to do that is regularly review where you're at and work with a trusted financial services professional who's going to look out for your best interests and keep you on track, keep you from making emotional decisions that might be mistakes. Stay steady, even when the markets aren't, even when the economy might be telling you, oh, it's going to be terrible. The sky is always falling. So, Travis, great information today. Love that. And listeners, once again, pick up the phone, give Travis a call. Great show, listeners and viewers. Thanks for tuning in. That does it for today's episode of Navigating Your Retirement with Travis Chance. Travis,
Don't let the old man in, Tony.
don't let the old man in. Love it.
See you
That does
next
it.
week.
See ya.